Hello, students. This is Khamis Bilal, your TX teacher. We are exclusively teaching in IV online. As we have already completed topic number 1, chapter 1, that's name is Introduction to Tax as well as how to calculate income tax. In the previous class, we learned some basic rules of interest income, some basic rules of dividend income. We learned how many sources an individual have to earn income. And then after we went through for the heads of income. As you know that there are three heads of income: non-saving, saving, and dividend. After that, we used the tax bands. As you know that the status of the taxpayer is very important. We have three types of taxpayer: the basic rate taxpayer, whom in taxable income is less than 37,700 is called a basic rate taxpayer. But your if income, taxable income, mark my word, taxable income increases 37,700 but less than 1,25,140, you are a higher rate taxpayer. If your total taxable income is more than 1,25,140, you are a additional rate taxpayer. Now I'm moving towards the topic number 2, that is very important topic for the purpose of personal allowance. So I need your focus on it, because as you know that personal allowance will be used throughout our TX course. Now see, that's the chapter number 1, but the topic number 2. Topic number 1 was perform of income tax by of individual, right? Now we are going for the topic number 2, of chapter 1. As you know that the name of the chapter is basic income tax calculation. That's the topic number 2. Personal allowance with personal pension contribution and gift aid donation. That's the name of the topic. That this topic is very much important. Now, as I have already told you, there is an amount of personal allowance, and what I believe that you know what is personal allowance. The fixed amount for personal allowance is 12,570, but there are some circumstances in which this amount can go less than 12,570 or 0. It means we have three conditions. It can be 12,570, it can be 0, it can be between 0 to 12,570. Now, what are these conditions? Let me discuss the conditions of personal allowance. The conditions of personal allowance. Now, see the conditions. Number 1 condition: if your adjusted net income is less than equal to 1 lakh pound, your personal allowance will be 12,570. Please write this point number 1. Point number 2, if your adjusted net income is more than and equal to 1,25,140, then your personal allowance will be 0. Please again note this point. The last point, if your adjusted net income is between 1 lakh to 1,25,140, your personal allowance amount has to be calculated. Then you need a formula to calculate it. And what is the formula? Let me just write down the formula how to calculate this. The formula is 12,570 less ANI less 1 lakh, that's your limit, divided by 2. This formula will be used in order to calculate the personal allowance. I would like to explain these all 3 points with the help of examples. So let's go for the examples. Example number 1. Example number 1. Mr. A has following incomes. Number 1, employment income. That's, let's suppose, 30,000. Trading income. Let's suppose it is 10,000. Got it? Required. Calculate tax liability. Calculate tax liability. Now, first you need to know what is adjusted net income. What is adjusted net income? The short form of adjusted net income is ANI. You need to calculate ANI first. I would like to tell you then when do you need to calculate ANI? When you have an information of personal pension contribution and gift aid donation in the question or in the example. When do you need to calculate ANI? You need to calculate ANI when either you have personal pension contribution in the question or gift aid donation in the question. Later on, I will be explaining what is personal pension contribution and gift aid donation. For a time being, just I would like to explain you how to calculate ANI. I'm not explaining you right now what is PPC. What do you mean by PPC? PPC means personal pension contribution and gift aid donation, GAD. We will learn this after few minutes. But when do you need to calculate ANI? When you have either PPC or gift aid donation or both. When you do not have any such information regarding personal pension contribution or gift aid donation, you don't need to calculate ANI. In that case, your ANI is equals to your total income. When there is no information, when there is no information either of personal pension contribution or gift aid donation. In my example, there is no such information regarding both of this. So in that case, my ANI is equal to my total income. Let's calculate my total income. Now you need to make total. Then both these sources belongs to non-saving. Then just write employment income. That is 30,000. It goes on a total column. Then it will be the part of non-saving. Then the trading income. It will be the part of non-saving again. Now you need to make a column. 40,000. That is your total income. In that case, my ANI is 40,000 because now my total income is equals to ANI. So here we are meeting the point number 1, that is if your ANI is less than equal to 1 lakh, so your personal allowance will be 12,570. That is a normal personal allowance. Now you get your taxable income. 40,000 less 12,570. That is 27430. 27430. It is your taxable income. What is the status of Mr. A? The status of Mr. A is basic rate taxpayer. The reason is that Mr. A total taxable income is less than 37,700. So I just need to apply 20% because basic rate non-saving tax rate is 20%. That is 5486. That is your tax liability. That is your tax liability. Got it? That's the condition number 1. Now moving towards the condition number 2. Mr. B has employment income 1,40,000. Calculate tax liability. Now you need to be very focused in this example because this consists of a bit trickier as compared to previous one. Now be focused. Now be focused. Please guys, please. Do we need to calculate A and I? No sir, we don't need to calculate A and I because in your question there is no such information given either about personal pension contribution or gifted donation. In that case your A and I is equals to total income. Got it? True. Very true. Now just make column total, then non-saving. You have employment income, that is 1,40,000, that is 1,40,000. So this is your total income. Got it? This is your total income. You can just make another thing, that's 1,40,000, 1,40,000. That is your total income. Got it? Now your total income is equals to A and I. Got it? Now be focus over here. I need your bit focus. Please, I need your bit focus over here. Okay. Now, the condition number 2. If your A and I adjusted net income is more than or equal to 1,25,140. Here my A and I is 1,40,000. It means it is more than 1,25,140. So my personal allowance will be 0. My personal allowance will be 0. So now I'll get my taxable income. Now I'll get my taxable income. Got it? Now my question is that what is your status? What is the status of Mr. B? The status of Mr. B is additional rate taxpayer because it is crossing the limit of 1,25,140. Now you need to be very, very, very careful over here. Your band starts with 0 and ends with 37,700. Then your band second band starts from that higher rate band, 1,25,140. And the last additional band starts from 1,25,000 and goes till infinity, or you can write above, right? Now make sure this slab, the second slab, the second slab has a limit. The second slab has a limit to adjust an amount. The second slab has a limit. Be very careful. You can only adjust just less 1,25,140 less 37,700. You can only adjust 87,440 in your second slab, right? So now see the answer. From 1,40,000, I'll apply tax on 37,700. That is the 20% because it is non-saving. 37,700, 20%. That's 7,540, right? As I have already, let's calculate a rough calculation. 1,40,000, 37,700 has already been taxed. You will have 1,02,300. As you know that you have left 1,02,300, and in the second slab you can only adjust 87,440. So you are adjusting maximum amount, that is 87,440. It will go on 40%. That will give you an 34,000 976. Now from that amount you have already taxed 84,000, 84,000, 87,440. You have left only 14,860 pound untaxed. Now you will go for this as well. As you know that non-saving will be taxed at 45% for an additional rate 6687. Just you need to add both things. 34,976 plus 7540 plus 6687. This is your tax liability. You just need to make sure that you have applied tax correctly. Just add the first column. That's a double check. 1,40,000. I have in the previous class I have already told you that this has to be compared with this amount, right? If it is equals to this amount, so it means you have applied tax totally and probable correctly. Now before going towards the example number 3, I need to explain you a concept regarding pension. But before that, I would like to tell you that there is a whole chapter in the pension, and this chapter includes 4 concepts regarding the pension. This chapter, which name is pension, is a bit trickier one. If I explain you all 4 concepts in one chapter, your mind will blast, and I don't want my student get frustrated. So what I do, I normally teach student concept in parts between any of the chapters. One by one I teach the concept with a passage of time, and when we will be reaching the chapter of pension, I'll revise all the 4 concepts and you will not have any trouble because you have already covered this. So that's the very easy thing to understand. The structure of a TX is a very huge, but if your teacher is very much experienced, so he or she can sum up in a very good manner. So let's explain what is pension and what is gift aid donation and what are the concepts which we will be learning in this chapter. But today we will learn only one concept. Let's go first, try to understand what is pension. Okay. First of all, you need to understand there are 2 types of pension. One, pension received, that is simply your income. It falls under non-saving head. That's it. Nothing else. That's the pension you received as your source of income after the retirement. But my task is to explain you pension which you contribute as an expense. Pensions which you contribute as an expense, that's your income. That's the pension which we will have a whole chapter, that expense. See, you have 2 types of pensions which you treat as an expense. First name is occupational pension contribution. The short form is OPC. I will use this short form. The other is personal pension contribution. The short form is again PPC. I'll use the short form, right? So we have a chapter and we have a concept regarding this. Got it? Now I would like to explain you first what is occupational pension, right? OPC. It is a fund which is created at your job place where you do employment, where you do job, right? It is a fund which is created by the organization, fund created where you work, basically where you do job. In that fund, two people contributes. Number one, employer. Number two, employee. Got it? Let's suppose employer is contributing £100 and employee is contributing £150. So total in that fund £250 has been contributed. When the employee will leave the job, this fund will be broken and the amount which is contributed in it, let's suppose £250, will be given to employee, right, at the time of leaving the job or the retirement. Got it? That's the concept of occupational pension contribution. That's the best example to explain the personal occupational pension contribution. Now see what happened. Sometimes I'll explain you the little concept which hardly tested in TX. At the end of the retirement, you get the pension. Either you get a lump sum amount. So how this lump sum amount will be taxed, I'll be explaining you later on. But right now I'm explaining you the main things. That's the very important point. See, when we will be learning employment income, we will make P&L of P&L. We will make P&L of employment income. The contribution which is contributed by employee in OPC, occupational pension contribution, will be less in P&L of employment income, right? I told you 2% contributes in that fund, right? So be careful. The contribution which is contributed by employee will be less from the P&L of employment income, because employment P&L belongs to employee, right? Sir, what is the treatment? What is the treatment of employer contribution? Listen, when we make when we will make employment income P&L contribution by employee, contribution by employer will be ignored. Why? Because it is expense of employer, not employee. And this employment income P&L belongs to employee. So expense of the employee will be deducted from the P&L of the employee. Employer expense will not be deducted while you will be calculating the employment income. Mark my words, mark my words, mark my words. People get confused, student get confused, right? So whenever you make a P&L of employment income, just focus on the occupational pension contribution by employee. Just you need to less it from that P&L. But just if the examiner is giving you the employer occupational pension contribution, just ignore it while making the employment income P&L. Sir, what will be treatment of employer occupational pension contribution? See, note, it will be deducted. Yes, it will be deducted, but not from employment income P&L. It will be deducted from trading income P&L. That makes sense. Now, this expense belongs to sole trader business. So business P&L will get the employer expense effect. Are you getting my point? Are you getting my point? So that's the whole story of the occupational pension contribution. Now moving towards 4 concepts. I believe you have cleared the concept of occupational pension contribution. Now what are the 4 concepts of personal pension contribution? Before that, I need to explain you what is personal pension contribution. Short form is PPC. It is also a fund. It is also a fund like occupational pension contribution. But this fund is not created at the job place. This fund is created by the institutes, by the financial institutions, which is backed by the HMRC. And HMRC encourages these kind of institutes. Right? So in that, again, 2 parties contributes. Number 1 is individual. Number 2 is HMRC. See the pattern of the contribution here. Let's suppose individual is contributing £8,000 in the fund. HMRC says that put this is 80%. 8,000 is an 80%. It means it is a net amount. It means it is a net amount. You need to convert this net amount into gross amount. How can we convert it in a gross amount? Just simply use an grossing of factor, that is 100 over 80, and multiply by the amount you have contributed. That is 10,000. And put 10,000 in the fund. What does it mean? What does it mean? I have contributed only 8,000. How it is possible that in my fund you are saying that you have 10,000? HMRC said that 20% is my contribution, dear. And that 20% here in that example is 2000. What if I contributed 10,000? Make it gross. It's 12,500. It means 2,500 is from the pocket of HMRC, because HMRC is promoting you to open a personal pension fund. HMRC is giving you 20% from its pocket. That's the one benefit you are having, because HMRC wants to encourage these kind of institutes. Got it? Now, we have further benefits as well of personal pension contribution. We will learn this with the passage of time. Now I'm writing the concepts name, only the concept name. Number one concept regarding personal pension: how much amount will be used to increase the band, or you can just remember the name, the concept name, that a shorter way: band increase amount. That's the short name of the concept. Concept number two, which I will be explaining you today: increase band. Concept number three, limits of pension. The last concept, taxed at top slice. These are the name of the concept. Today I will be just explaining you the concept number two, that is increase band. For that I would like to just go for a very good example in which we will be mostly tested are all the rules which we have learned till now. Let's go for the best example. Example number 3 of today's class. Mr. C has following incomes: pension received 5,000, employment income 20,000, trading income 40,000, property income 60,000. Just make it 50,000. Interest income 5,500. Dividend income 1,500. Got it? Now be focused. Now I am adding that Mr. C contributed in PPC net amount. If examiner is writing the net amount, so make it gross. If examiner is silent, so assume that it is net amount. You need to make it gross. Let's suppose 10,000 gift aid donation. Here examiner is silent, so it means it is net amount. 2,000. Got it? Got it? Okay, fine. Now required. Same. Now we need to do what? We need to make columns: total, non-saving, saving, and the dividend one. First, you have a pension received, that's 5,000. That's the part of non-saving, 5,000. As you know that saving income and dividend income has only interest income, saving has only interest income, and dividend has dividend income. Other than this will be dumped into non-saving head. Then you have employment income, that is 20,000. Then you have trading, 40,000. Then you have property, that's 50,000. That's a part of non-saving, 50,000. Then you have interest income, that will be the part of saving. Then you will have dividend, that will be the part of dividend one. Thus you need to make a columns. Okay. Now after adding all the columns, you will get a total income. Just add it: 5,000, 20,000, 40,000, and here you need to write 5,500 and 1,500 as well. 50,000 plus 1,500, 5,500. Got it? That answer is 1,22,000. Got it? 1,22,000. Got it? Okay. Add this one: 5, 20, 40, 50. That's 1,15,000. That's 5,500. That is 1,500. Got it? Okay. Now, sir, my question with you: do we need to calculate A and I here? Yes, we need to calculate A and I here, because in this example we have information regarding personal pension contribution as well as gifted donation. Now we need to calculate A and I. But sir, you did not tell us how to calculate A and I. That's why I am here to explain you how to calculate A and I. See the format. How to calculate an A and I. A and I. Okay. Let's make it on another page so that it will be like very easy to understand. How to calculate adjusted net income. How to calculate adjusted net income. Very easy to understand. First, you need to write total income. Then you need to less personal pension contribution, the gross amount. And what is the factor? 100/80. Then you need to less gift aid donation. Again, the gross amount. The factor of both are same, that is 100/80. You will get A and I. You will get A and I. According to my example, my total income is 1,22,000. Right? My contribution in PPC is 10,000. I need to gross it up. My gift aid donation contribution is 2000. I need to gross it up. 10,000 multiplied by 100 over 80, it will give me 12,500. 2000 divided by 80 multiplied by 100, it will give me 2,500. You need to less this in order to get the ANI. It is 1,07,000. It is 1,07,000. Now here condition number 3 is fulfilling where we started the things. Here we go, guys. If your adjusted net income is between 1 lakh to 1,25,140, then you need to calculate the PA. The formula is 12,570 less bracket open ANI minus 1 lakh divided by 2 bracket close. You need to use this formula over here. $12,570 minus bracket open ANI, that is 1,07,000 less 1 lakh divided by 2. 12,570 minus 3,500. So your new personal allowance is 9070. 9070. Now you need to less your personal allowance working 9070. Here we will 9070 and the personal allowance limit has been finished. You will get a taxable income. You'll get the taxable income. Got it? It is 1,12930. 1115 minus 9070. It is 1,05930. 5,500 and the 1,500 as well. Now we have calculated total taxable income, that is 1,12,930 as my status of the taxpayer has to be checked now. Why I'm saying that? But fortunately, you know what is your tax status payer, as your income is falling in the second band, so you are a higher rate taxpayer. But here the concept of PPC. First, PPC and gift aid donation is used in the working of ANI. Concept, I am giving the concept. PPC and gift aid donation is using for ANI. Both are using for ANI. If it were not here, so your personal allowance will be less than this. So first thing, whenever you have PPC and gift aid donation in the question, find out adjusted net income. The second thing which is very important is that I'm writing your real tax band here. What do you mean by real tax? Just a moment. I'll explain you what is the real tax band. This is your real tax band. Now, how HMRC encourages personal pension contribution and gift aid donation? See, HMRC says that increase your bands with gross amount 12,500 and 2,500. It means 15,000. It means 15,000. You will have your new band 37,700 plus 15,000, 52,700. 1,25,140 plus 15,000. It's 140,140. First, PPC and gift aid donation both are used for ANI working. Second, they both will increase the band with the gross amount. Mark my word, write my words, right? So now you will have a new band. You guys have a new band starting from 0 and what, 52,700. This is your basic band, and your higher band is 1,40,140, and your additional band is starting from here and it's infinity. Now again check your status of taxpayer. It might get changed because your band size has been increased, right? So still your total taxable income is falling in the second band, so you are a higher rate taxpayer. Now be focused here. How it is helping you, how it is helping you, how it is efficient for you, how it is giving you a tax relief. See my both hands. You had a band of 37,700 in that example. So in that band, you applying tax 20%. You are applying tax 20%, right? And the taxable income which is falling ahead of this band will be taxed at 40%, right? See here, right? See here. If I increases the size of the band, so the amount which could be taxed at 40%, now due to the increase of the band, it is falling in the basic band which will be taxed at 20%, yes or no? So you are getting the relief of 20%, right? You are getting the relief of 20%. After increasing the size of the band, the amount which could have been taxed at 40% now is falling on the basic rate, right? So see, 1,05,930. Now you need to tax it. So utilize 52,700 will be taxed at 20%. 52,700 will be taxed at 20%. 10540. The remaining amount left 105,930 minus 52,700. The remaining amount left for tax purpose, which is falling in the next band, 53,230. It will be taxed on 40%. 21292. Now I'm going for next. I have already completed this one. Now I'm going for this one. So as you are a higher rate taxpayer, so first 500 pound will be taxed at 0%, right? The next 5,000 pound will be taxed at 40%. Now for the dividend income, I'm going for the dividend income now. As there is no rule for dividend income, everyone has a similar type of rule, no individual rule. First 1,000 will be taxed at 0%. The next 500 will be taxed at according to the band rate, that is 33.75%. 168.75. I need to add both the columns so that I understand that I have applied tax on all taxable income. It is giving me answer 34,007.5. 52700 plus 53230 plus 500 plus 5,000 plus 1,500. 11293. This has to be equal with your this amount. That's the equal amount. It means you have applied tax on all taxable income. Now the thing, As I have already mentioned you, the gap between the second slip, it remains the constant same, that is 87,440. You can check by deducting this amount from this, right? Because the band is increasing from the both sides, so the difference will remain the same. You need to check for your better understanding. Just check that you are not crossing that second band limit. Just add it. 53230 plus 500 plus 5,000 plus 1,000 plus 500. So its total is 60 to 30. It means you are still in the second band. When you just when I ask you the status of the taxpayer, so it gives you the confirmation that you are going in the next band or not. If you say that you are a higher rate taxpayer, it means you are crossing the basic band slab, you are going in a high rate. If I say you additional rate taxpayer, so it means you are covering both the first slab. You need to check the second slab limit, right? I hope you are understanding my point. The last thing of the today's class is what is gift aid donation. Whenever you provide help, financial help to a approved charity, so HMRC encourages to help others by giving you such relief. The relief we have already learned. First, PPC, personal pension contribution, and gift aid donation, both use for the working of ANI, right? The second benefit, it increases the band size. Examiner might ask you few couple of question regarding my example number 3. First question may ask how much tax relief is Mr. C is having. The answer, very simple to tell the answer. Take the gross amount of personal pension contribution and gift aid donation. That is 12,500 for personal pension contribution and 2,500 for gift aid donation, and always apply 20%, means 15,000. The amount which helps you to increases the band, that is 15,000, 20%. 3,000 pound is a tax relief. 3,000 pound is a tax relief. Got it? Now some type of planning questions, tax planning questions. What will be the tax liability if Mr. C does not contribute in PPC and gift aid donation? Now I'll just explain you bit thing, then you are very sharp and intelligent. You need to explain, you need to calculate yourself. First, this PA will be changed. This PA will be definitely changed, because he is saying if there is no such contribution, then my total income will become 1,22,000. Now you need to calculate the PA here. New PA 12,570. Now my total income is equals to ANI, because there is no contribution in PPC and gift aid donation. 1,22,000 minus 1 lakh divided by 2. Now your new PA is 1570. You need to write your new PA, then your taxable, total taxable will automatically increase. Then you don't need to use increase band because there is no such contribution. Then you need to calculate the total tax liability with the help of this PA. The PA is 1570, right? You need to calculate your taxable income definitely will increase. Got it? Other things remains the same. Now you need to apply tax here. Got it? Let's go for it for you guys. Let's go for you guys. Here we are calculating if there is no such contribution. Till 37,700 you will be applying 20%. For next part of the non-saving is left 40%. As you know that you are a higher rate taxpayer, so first 500 of interest income will be taxed at 0%. Next 5,000 will be taxed at 40%. 1,000 of dividend income will be taxed at 0%, and 500 will be taxed at 33.75%. 37,700 multiplied by 20%, 7540. 75730 multiplied by 40%, 30292, 0, 2000, 0, 168.75. Let me check again the calculation of last one. Yes, 2000 plus 3929 plus 7540. It giving me answer 4637.75. Let me cross check. 37,700, 75730, 500, 5,000 and the dividend one. It is 1,20,430. Here we go. Here we go, guys. Here we go. That's equal to this. Got it? Now, tax saving. If we contribute in PPC and if we don't contribute in PPC, what is the tax saving, right? If I contribute in PPC, so my tax liability is that is 34,007.5. If I don't contribute in PPC, so my tax liability that's 4637.75. Got it? So I need to calculate the tax saving. It's 663. That's my tax saving. Right? That's the amount of tax saving. Examiner might ask for you for tax saving planning. The third one, net take home. Whenever we talk net take home amount, so it means you just need to compare both options, inflow and outflow. Go for it now, please. If we contribute, if we don't contribute, where in PPC and gifted donation. First, income. Check how much inflows of you are having. 5,000 as your pension, 20,000 as your employment, 40,000 as your trading, 5,500 as your interest, 1,500 as your dividend. So in both options you will having 72,000 of income. Got it? For earning this 72,000 you are contributing PPC. Here you need to less net amount because from your own pocket 8,000 is, sorry, 10,000. I guess 10,000 I contributed. Yes, I guess I 10,000 is going. And for gift aid donation, again net amount because 20% is from the HMRC pocket, right? 2,500. Here we are not contributing anything, so there is nothing left, right? Now less income tax liability. Income tax liability, we just have calculated it. If we contribute 30,400 will be a tax liability. If we don't contribute, our tax liability will be increased. 34,000.75, 4637.75, right? Just less it. 72,000 minus 10,000 minus 12,500 minus 34,000.75. It is giving you 25,499.25. Now here 72,000 less, it is giving you answer 31,3625. Now you have calculated both the options. Now in option 2, if you don't contribute, your net cash benefit is greater than if you contribute here. So are you getting my point? There is a benefit of tax saving, but if you are talking about net cash take from home, is more in, we select the option number 2, right? I believe that you are getting the point right now. I guess we have learned a lot of things. The first is personal allowance concept, 3 conditions. When it is 125,701, it is 0 when we need to calculate it. Then we learned what is pension, what is gift aid donation, what is occupational pension contribution, and what is its concept. Then we learned only one concept of personal pension contribution, that is increase of the bind. Then we came across that how examiner can ask 3 type of question. How much tax relief is Mr. C is having? 20% of the gross amount. Tax planning question, that if we contribute and if we don't contribute in that, so what is the tax saving? The last one may be a part of tax planning, what is that net home benefit, net take home benefit. In this you will just focus inflow and outflow of the cash, So I believe that you enjoy the class. We need to make a lot of practice of it. So that's the end of the class. SK class off.